What's up, everyone? But better known as MG the Mortgage Guy. So, look, man, welcome back to the channel. I hope all is well today. What is today? I think today is Tuesday, right? Today is Tuesday, March 31st. First quarter is over today, and second quarter begins tomorrow. I'm super excited about the second quarter, but we'll talk about that at another time. So, if you're new to the channel, make sure you subscribe. Make sure you hit the bell for notifications. Put up a lot of content. If you go to the playlist, check out my playlist because all of my playlists is organized by loan products, right? So we have FHA, we have VA loans, hard money, et cetera, et cetera. So look at the playlist, get familiar, go learn. And being the fact that we're on quarantine, even though I'm outside in the car right now, I had to go to the grocery store. So I decided to make a quick YouTube live, going live real quick before I go in the house and deal with the family. So look, man, um, you guys here on live, make sure you hit that like button, smash that like button, and if you want to support the channel, hit that super chat. Show the channel some love. All right, so look, I want to talk about FHA loans, right? Because I put out a video the other day about FHA and all the changes. So maybe on the end card, I'll put that video after this. Uh, so I want to make a few things clear because I've been getting a lot of questions um, about this. FHA did not change the minimum credit score. Let me get very clear. FHA, HUD, did not change FHA's minimum credit score. Okay. Technically, with an FHA loan, FHA will still buy loans down to 500 credit score, right? What happened was lenders added overlays. Okay, there's a difference. All right, there's a big difference. FHA, I'm gonna say this again. FHA, the program, did not change their credit score, their minimum credit score requirements. Lenders themselves changed it. They added overlays to FHA programs, which every lender has a legal right to do that. So you still have a handful of lenders out there that still will underwrite mortgages um, that are FHA insured down to a 580 credit score. Now, those lenders who are still writing those mortgages, as we say in my world, it's going to be more expensive in two ways. Number one, it's going to be expensive in interest rate. And number two, it's going to be expensive with closing costs. Now, I'm going to break this down for you guys. Interest rate first. Most lenders who are still willing to write that paper means that they are selling directly to Ginnie Mae. Ginnie Mae is what all FHA loans are traded on Wall Street, right? Ginnie Mae. It's their pool. So if you are selling directly, if you are a lender and you're selling directly to Ginnie Mae, you have security knowing that FHA will purchase your loan, right? And you ultimately, as a lender, will get paid. All right. Now, there's going to be risk associated with these credit scores now, and that's why they're going to charge you a higher interest rate. So if you have a lower credit score in today's mortgage world during COVID or post COVID, you are probably going you're going to see a rate like right now. A friend of mine's told me they locked someone in at 5% on a 30-year fix with someone with a 600 credit score. Just 2 weeks ago, just a week ago, that same person would have qualified for a rate in the mid threes. So that just shows you like how high the rate went for that person. Now, if if a lender or a mortgage broker, well, broker can't sell anything because they don't have the money. They're middlemen. But if a mortgage company doesn't sell directly to Ginnie Mae, then they're correspondent lending, meaning they're selling it to another bank. And those banks, they do it as correspondent lending, right? So those banks are now requiring anything that comes from a correspondent or TPO, which is third party originator, they're putting overlays on that paper that they're getting from them to protect themselves from any buybacks. Now, a buyback is when you close on a loan and then the investor, there was a default, there was something, there was some fraud on the loan. It could be numerous reasons, right? That investor is requiring the originated lender to buy that loan back from them. All right. So that's a way how it's going to get more expensive. Now, also another way how it's going to get more expensive for that borrower is now they're going to have to pay points. And I'm not talking about now, for those of you who don't know what points are um, the equivalent to paying is points are 1% of your loan amount. So if you have a loan amount of 100,000, it's $1,000, and points are used to buy down your interest rate. Now, I'm a fan of buying points depending on the situation. It's hard to get an angle when you're in YouTube in the car. All right, there we go. So points are 1% of the loan amount, like I said, is used to buy down your interest rate. Typically, 1 point will get you about a quarter to 3/8 of a point lower interest rate. But if you have that below 640 right now, you're probably going to pay 3, 4 points. So now, and then again, that's dependent on the lenders, depending on the broker. It just really all depends on who's originating that mortgage, right? Like again, I said a friend of mine's had a deal, 5%, 30-year fix with no points for the person who had a 600 credit score. And I spoke to another buddy of mine. They was like, no, we can't even offer that. We'll have to charge 2 points at that 5%. So it just really all depends on who you're talking to, right? So, moral of the story, like I said in the beginning of this, FHA did not change the minimum scores. Lenders applied overlays to this. And so that way they can protect themselves. Okay. Now, majority of the lenders out there, correspondent lenders, if you go to a broker, even the major players, they won't take you right now if you're below 640, because they're assessing their risk factors. They want 640. I know banks that are at 660 right now. Um, so bottom line is, if you are a FHA buyer, if your loan wasn't locked in before all these changes were made, then unfortunately your deal is going to die. I literally had this week alone, I think 7 people that were in contract to purchase homes that were below 640 and now can't do a loan with me. And when I refer them out, the people that I referred them to could do the loan, but it's at a much higher rate, and now the debt to income ratio doesn't work. So it's bad situations all around. So I'm saying all this to say, man, my family here on YouTube, if you're looking to purchase a home this year, I need you guys to really start focusing on getting your credit up, because this might become the new normal. Banks don't like uncertainty. Investors, most importantly on the secondary market, they don't like uncertainty, right? So when, especially that below 640 has a high default ratio as is, you might see several lenders stay at the 640 mark or go down a little bit and say, hey, you know what, we're going to go 620. You know what I'm saying? So right now, and the people who are still going to offer below what everyone else is doing, it's going to come at a higher price. Can it still be done? Absolutely, but you're going to pay more. So my during this time, right? We are all quarantined for the most part, right? Use this time wisely to really, be accountable. Number one, where um your credit is. Do what you need to do to get that credit to where it needs to be if you want to get in the real estate game. Get your credit up. Well, Derek, thank you for watching that video on 203Ks, but unfortunately, that's an old video and a lot has changed with 203K. I'm going to make a separate video about that one, maybe tonight or tomorrow. But there's a lot of changes with 203K. A lot of information is still relevant, but a lot of changes. So, and again, this is going to keep happening, right? Changes. You know, if you guys follow me on Instagram, you've been following me more than 6 months, you've probably heard me say millions of times, the market does not wait for you. The market does not wait for you. The market has a mind of its own. The market is going to do whatever it wants to do. And what I mean by that is interest rates change every 32 seconds that the market is open. A lot of people don't know that. Maybe I'll do a video breaking down how does interest rates work. Maybe I'll do something like that too. But home prices go up and down, they fluctuate. Programs, most importantly, programs programs change all the time. Guidelines can change at a click of a finger. And that's the most important thing. What you qualify for today doesn't mean you're going to qualify for it tomorrow. So this is why I am really encouraging people to stop with the analysis paralysis. You got to stop and over analyzing things. At some point, you got to just say, you know what, I'm going to do what I got to do, and I'm going to go out here and I'm going to execute on my real estate goals, because the market is not going to wait for you. It is not. Stop having analysis paralysis. Make a decision. Do what you have to do. Now, this is not a doom and gloom video. This all could just be temporary of what's happening in the market. So I don't want people to be nervous. I don't want, if you don't see me nervous, I'm going to tell you guys, like I tell, if you are a client of mine, I would tell you this right here. If you don't see me nervous, I don't want you guys to be nervous. Because look, remember, this is my livelihood, right? And if I can't feed my family, then I have issues. And if I'm not nervous, then I don't want you guys to be nervous. And this is going a little bit past the topic of this video, but I'm telling you this right now. In 2007, 8, 9, 10, when the crash was happening, I didn't have a YouTube channel I can go to and get information. I didn't have, a EYL private real estate Facebook group. There wasn't these options out there. There was no Earn Your Leisure podcast. There was no DJ Envy and Flipping New Jersey real estate seminars. There was none of these things happening. So going through probably the Great Recession, there was no one I can speak to kind of like, yo, how do we go through this? How can we do this? How can we do that? You know what I'm saying? There was nobody, nobody, right? You guys are blessed and fortunate to have all these outlets and be able to learn. And how do you go through this crisis? Most important thing you got to do is keep your mind fresh and keep your mind right. Don't lose faith. Be optimistic. Keep going through it. You know what I'm saying? Keep pushing. If you had a goal to buy real estate in 2020, keep that same goal. Don't let none of this stop you from achieving your goal. Just be smart. If you are financially secure, if you have reserves, if you have capital, meaning down payment and closing cost money, if you are financially fit to for home ownership, then you should still purchase real estate in 2020, in my opinion. I am. So just be smart. Now, I saw somebody put in the comments, my lender said it may go up to 680. That is possible. Nothing's off limits here. Lenders can do whatever the hell they want. And at some point it may go higher. Who knows? It could go back to normal. Yeah, I mean the accounts could come from, you can have 10 bank accounts. It don't matter as long as you got the money in there. You know what I'm saying? Um, so so I just want you guys to like really, I just wanted to clarify. The whole point of this video for me was just to clarify FHA did not change the minimum credit score criteria. It was more of lenders changed their overlays, not FHA. All right. I don't know what just happened here. All right. So look, man. Any questions? DM me in my Instagram. Send me an email, info@mg the mortgage guy. Tell me you came from YouTube in the subject. And I definitely want to. I just definitely want to hear from you guys. Um, join the EYL private real estate group. I'm super engaged in that group. I'm answering all the people questions all day long. Um, and like this video, man. It's about 100 of you guys on this video right now. So make sure you like this. Super chat your life away if you want to support the channel. And let's keep it going. Okay, let me see this. Shannon, Shannon, I like this comment so far. Hold on. You said I had clients that were pre-approved for 350 before Rona hit. They overanalyzed everything. Now they're